Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler. Well, as earnings season rolls on, big banks are exceeding expectations on the back of strong stock trading sales and investment banking revenues. In fact, this morning, firms like Citizens Financial, U.S. Bancorp, and Synchrony also reported results, and their shares, too, on the move. Well, with the presidential election just 3 weeks away and a strong run for stocks of late, some investors are wondering if it may be time for a healthy breather in the markets. Nothing out of the ordinary, just a natural consolidation phase. Well, we'll be diving into what this all means for the markets and your money on today's show, as we always do. And let's take a closer look at what's on tap this morning. Technical analysts will join me to talk chart patterns following the movement of shares. Of course, can provide indication as to what is next in the markets. Plus, the National Retail Federation is out with its holiday forecast, and its executive director of research will join my colleague Trinity Chavez with more. As we prepare for the opening bell, logistics company RXO is set to take the podium. The $4.5 billion firm recently purchased Coyote Logistics from UPS, and its CEO will join me live. Well, turning to the markets as we prepare for trade, stocks did edge lower yesterday, retreating from records, with big banks giving up earlier gains in the session. Joining me now with more is Andrew Thrasher. He's a portfolio manager of Financial Enhancement Group. Andrew, it's great to have you on the show today. Welcome to NYSE TV Live.
Thank you so much. It's great to be here.
We're so happy to have you. So it's been interesting over the course of these past few weeks. Several markets guests whom I've spoken to have noted expanding market breadth. By how much are the recent gains broadening out, and what does this mean?
Yeah, it's very encouraging. We spent the good part of the first half of the year really seeing the market driven by the FANG stocks, the Mag 7, just the handful of biggest companies in the world were really driving the market higher. And we weren't seeing a great deal of participation from your typical large cap or really mid or small cap stock. Now, since we've had that kind of a little bit of a pullback early in the year, just a handful of points, now as we're hitting new highs, we're starting to see an expansion. We're actually seeing a shift in leadership to where we're seeing equal weight indices hitting new highs, starting to see small and mid caps start to perform better. And when we start continuing to look at large caps, we're having over 77% of large cap stocks trading above their 200-day moving average. This is just under the 78.7% we had in July. So we are seeing a broadening out, seeing a lot more stocks advance, seeing many more days where we're seeing over 75% of stocks move higher on the day. And the fact that the FANG stocks, or the Mag 7, if we equally weight them, they're still down roughly 3-4%, 5% from that July high. So the fact that we're seeing other indices breaking out and actually the Mag 7 not is encouraging, starting to see a really broadening out of this rally.
So I'm curious, obviously, as someone who follows the data and the numbers, what this broadening out means about conviction behind the recent rally. Of course, I know you're probably looking at volumes as well, just to see how active these trades actually are.
Yeah, we are concerned with volume, and it's something we do track. One of the mini charts that we watch is looking at 6-month highs on above average volume, really wanting to see stocks breaking out on above average volume. And while we come out of the summer months, typically you do see lower volume trading. We're starting to move back in where we are seeing more stocks trade on above average volume, which again is very encouraging. Yesterday we had roughly over 20% of stocks hit a 52-week high as we start pulling out of that window, the 10% pullback during August, September last year. Now we're really starting to see a lot of the data really improve and not seeing as many stocks making 20-day lows. In fact, only 27% of stocks are actually down 10% or more. So we really are seeing a lot more stocks joining this uptrend, and we're less reliant on just 3 or 4 names like NVIDIA.
So with that, Andrew, does it look like the momentum can continue from here?
I think it could. So one of the biggest concerns that I have for the market right now would be momentum and volatility. To first start with momentum, when we do see the market pull back, momentum has seen very shallow dips, very shallow pullbacks. The concern is we're still seeing a bearish divergence on the daily and weekly charts for the S&P 500 and somewhat for the NASDAQ. What that means is momentum hit higher levels when we previously had new highs, and now after these recent pullbacks, it's not getting to the same level. It's as if you threw a tennis ball in the air, and as it begins to slow, tells us when it starts to reverse and start coming back down to earth. We're seeing somewhat of that in the market right now with these lower highs in momentum.
Yeah.
Now, this isn't necessarily indicative that we're going to see the market immediately crash or start to turn lower. This can be resolved through a matter of time, but it is a concern. We would like to see more higher highs in momentum than lower highs like we're seeing today.
Yeah, I want to talk about commodity prices because we know that they have been volatile recently amid tensions in the Middle East. What are the charts telling you there?
Yeah, so specifically, obviously, when we're talking Middle East, we're talking oil, and it's very sensitive to the day-to-day headlines of what's going on with Iran and Israel. We saw oil pull back after speculation that Israel will not potentially not attack Iranian oil production. We are also watching the crack spread. That's the difference in price of what oil is used for and its end product and the actual price of a barrel of oil. And we're still seeing it holding pretty much near those September lows, meaning that we aren't seeing the same rise or expectation of rise in oil prices. Now, the one area we are seeing bullishness in the price of crude oil. Yeah.
I'm going to jump in. We are hearing executive remarks in the boardroom. Stay with us. Maybe we can come back to you after these remarks. Let's take a listen.
Thank you all for coming here today. For us, the acquisition of Coyote was a transformational acquisition. And when I think about where it's going to go, it sets the foundation for who we're going to be long term. When you look at where RXO is going, we're going to be the largest truckload provider in North America. And the acquisition of Coyote helped lay the foundation for where we're going. To all of our employees that are here and to the ones that are watching, thank you so much for what you do. You drive where RXO is going. Your commitment to our customers, to the carriers we partner with, helps set us apart from the competition. So thank you. For our customers that are here, we realize that we wouldn't be here without you. That we take the trust that you all put in us extremely seriously and look forward to continuing to build on a long-term relationship. To the carriers that are watching, thank you. The brand protection that you have created for RXO is something that we appreciate, and we look forward to being able to continue to build on the partnerships that are out there to where we are going to have more than double the freight of what we had coming into this acquisition. So as we get ready to go out there, there's one thing that I want everybody to remember. When we get out there, I want you to be as loud as possible as we get close to the bell ringing. When we get there, we'll start a chant from the podium that some of you have heard is grow, grow, RXO. And the goal is to be as loud as possible, to have it to where they have to stop talking on television and recognize that we're here. So those of you that are used to being loud, take this as an opportunity to be as loud as what you can be. But for all of you, thank you so much for coming. Having this moment with you all means the world to me, and I look forward to our future together.
At the NYSE. You don't turn 232 years old.
And we're seeing the stock exchange's president, Lynn Martin, on screen there presenting a medallion to RXO's CEO, Drew Wilkerson. He's going to join me later in the show, of course, after the company celebrates and rings the opening bell on the podium. We'll see if we can pick up that natural sound of grow, grow, RXO, as he was encouraging those in attendance to do. But again, a reminder for viewers, this is a $4.5 billion logistics company. Recently made a huge acquisition of Coyote Logistics from UPS, obviously a key freight provider. And so there will certainly be a lot to talk to Drew about in just about 30 minutes time. All right, well, as we await that opening bell, I do want to turn back to the broader markets. Andrew Thrasher is with me now. He's a portfolio manager, follows the charts a lot. Andrew, you've been giving us so much great context this morning. And I want to go back to the volatility that we were talking about, specifically for commodity prices that you've been seeing, where you expect that to go. And then we can talk about volatility, perhaps for stocks as well. Please pick up.
Sure. The last comment I would make kind of on oil is even though we're seeing a lot of very sensitive reactions to headlines, we're still seeing crude trade from a very technical viewpoint lens, still hitting that 200-day moving average. We saw it pull back, meaning that it's still very much reliant on price and supply and demand. We're still seeing key levels tested and respected. And so we think that we can still evaluate crude, even though we have all the Middle East conflict and all the other inputs, hurricanes and whatnot, it's still respecting price levels. And we think that's still critically important to evaluating crude. So while we still remain bullish on the energy space, we still respect that there's every headline's going to have a daily wiggle on that chart, but we still remain intermediately term positive there.
So in terms of what happens then for stocks, is it rare that we would see stocks near record highs given the volatility that is out there?
Yeah, I think there's two key points here. Is one, we have something that a lot of people are probably familiar with. We have a U.S. election coming up. And so we're obviously seeing some price premium into S&P options that are obviously flowing over to the VIX. The actual time period that covers the election falls out of the VIX calculation actually tomorrow with expiration. But I do think we are seeing elevation because of the election, what's going on in the Middle East. But when we back those out and then look historically, this is actually a pretty unusual time. The VIX is around the 30th percentile of its one-year range, something you don't typically see when you have equities hitting all-time highs. This is something we did see back in January 2017, Actually, it happened right before the COVID crash, and then 2014 and 2007. It's only really happened 12 different times since 2004, just to show kind of how unique the volatility environment is. But I do think we have to put a giant asterisk on it saying, yeah, we've got an election coming. We've got a lot going on in the Middle East that can cause some volatility. We're also in the middle of earnings season. About 37% of stocks report next week. So there's a lot going on in the market that is getting priced into options, but it is very unique to see volatility be this high with the market at new highs.
You know, I want to talk about what we're seeing in emerging markets, specifically China, because those stocks had a huge pop. I mean, we're talking about gains of close to 10% on some days, but they have lost their luster in recent trading after we had seen that stimulus actually announced. And so do you think that there's more deflation in those asset prices ahead, or that the stimulus announced out of Beijing can perhaps create some sort of sustained run higher for those Chinese shares?
Yeah, that's the big question. So after the big pop, we did see FXI, the Chinese ETF, pull back about 15%, I believe 5% yesterday. I think there's a big expectation when they heard the announcement of the stimulus. A lot of traders said, well, shoot now and aim later, in evaluating what's actually being done in China. They've been trying to stimulate their markets for a while, doing things like banning short selling, putting restrictions on certain types of trading, their version of the Federal Reserve, their central bank trying to buy up assets. And now they're trying to stimulate things on the economic side. And there was a big expectation that it was actually going to be a larger amount of stimulus than what appears is actually being done. And so I think that's part of why you're seeing FXI and a lot of the Chinese equity markets pull back now. We continue to view emerging markets, and specifically China, more as shorter term trade opportunities than something we want to buy and hold and close our eyes for several years. We think there's still going to be a lot of volatility in that market, as we very much have seen, just a 15% pullback in a handful of days. And so we're still remain somewhat cautious on those markets. The type of stimulus that China's doing both in their market and economy has not worked in the past as far as stimulating equity growth, what we're most concerned with as U.S. domestic investors. And so we do want to be cautious towards expecting, just because they make the announcement, that it'll be the same type of market response as we've seen in Europe or here in the U.S. when we have stimulus. It hasn't worked in the past. Doesn't mean it won't work in the future, but we need to be leery of what the type of equity reaction will be.
Andrew, so good to get your take, as I see stocks, the major indexes, set to open fractionally higher here at the open. That's Andrew Thrasher, Portfolio Manager of Financial Enhancement Group. Andrew, thanks.
Thank you.
All right, well, stay with us, because up next, we are going to dive into the retail space with the NRF recently releasing its holiday shopping forecast. My colleague Trinity Chavez will join us with more. Stay with us.
So, Peter, now tell me, what service does Spire provide, and what is your ultimate mission in space?
Spire was founded 13 years ago with a mission to leverage data from space to improve life on Earth. So we have a massive satellite constellation, the 4th largest in the world, to collect data about all sorts of human and nature's activity and provide it as a subscription to customers, over 700 all across the world.
Now, McKinsey recently said if you don't have a space strategy, you need one. So tell me, what are your thoughts about that statement? And do you think McKinsey is correct?
I do think McKinsey is correct. And they placed an analog to what they said in the 90s about internet strategy, because they recognize that there is an exponential technology that is driving the improvements of the capabilities. Back then it was computers and the internet, and today is space. So I do believe that they are correct. And space is already used every single day by more people than they know of, but that is going to dramatically increase in the future.
Peter, can you talk about the technology behind Spire satellites that can deliver these solutions to its customers?
There are three types of spacecraft or satellites. There are those that look, they basically take reflections from the sunlight. There are those that talk, they're basically transporting data from one spot on Earth via space to another spot. And then there are those that are listening. And that is what Spire does. We use radio frequencies to observe the weather, ships, planes, soil moisture, wind speeds, all sorts of information. And then we analyze it and deliver it to our customers as a subscription.
Now, Spire provides what it calls a space as a service. Elaborate on what this is and who are your customers?
So when you think back to Amazon back in the days, they were selling books and other products, but then they had to develop.
And welcome back to NYSE TV Live. I'm Kristen Scholler here in studio. Well, the Commerce Department will release the monthly report of retail sales tomorrow. And it comes after the National Retail Federation, or NRF, yesterday announced its own holiday shopping outlook. My colleague Trinity Chavez joins me now from across the floor with more. Trinity, good morning.
Good morning, Kristen. That's right. So with holiday season just around the corner, consumers are focused on spending and retailers need to focus on preparing for their busiest time of year. According to the National Retail Federation, holiday sales are expected to grow between up to 3.5% over last year. Joining us now to break this all down is the NRF's latest forecast, and what it means for both shoppers and retailers is Mark Matthews. He is the Executive Director of Research at the National Retail Federation. Mark, thanks for being here.
Thank you so much for having me. It's my pleasure.
So, Mark, the NRF has forecasted that holiday spending is going to grow between 2.5% to 3.5% this year, with total sales expected to reach up to $989 billion. What factors do you think is driving this growth, and will it continue through 2025?
Well, it's first, I have to say that we need to recognize that this is an economic forecast, so it looks at a variety of economic data. Our chief economist, Jack Kleinhens, is one of the leading forecasters in the country, and has a record of accuracy over many years of making these forecasts. And what we see in this forecast is almost a return to normal. If you look at the pre-pandemic period, for the 10 years pre-pandemic, we had retail sales growth of around 3.6%. So this is really about the effects of the pandemic practically disappearing, and the consumer is back where they used to be. The consumer still has earning power. Wages have exceeded inflation for a long time now. So the consumer can spend, and the consumer has the ability, especially we've seen through holidays and events this year, Mother's Day, Father's Day, back to school. We've seen near record spending in all those events. So the consumer is clearly willing to go out there and spend on loved ones, and they have the ability to do so.
And it seems that retailers are preparing for this influx. In fact, NRF has projected that retailers will hire between 400,000 and 500,000 seasonal workers, slightly down from 2023. So what does this tell us about retailer confidence heading into the holidays, and how might labor challenges impact their ability to meet demand?
Well, I think it's really important to recognize that retailers have been fire tested in a way during the pandemic period. Many challenging issues across the supply chain. So, I think if anybody's ready for whatever might come during the holidays, our retailers are absolutely ready for whatever the consumer chooses to do. We definitely expect to see a consumer that is looking for promotions. They're looking for deals, despite the fact that the consumer economically is in reasonably good shape. They still feel the effects of inflation. They still feel tight in a way, and they're looking for opportunities to find things on sale and to maximize their buying power.
And you bring up a good point about how although we are seeing inflation come down slightly, those consumers are still a little bit hesitant and become a little bit more frugal when it comes to their spending habits. So how is this impacting the overall retail sector strategy ahead of the holiday season?
Well, yeah, as I said, retailers have to be very, very focused on offering consumers the best deals, right? Because the consumers are absolutely out there looking for good deals. And, we have a consumer that is, wise these days. They are, wise to the ways of, finding the best deal. They all know how to search around, and, the retailers actually give them the ability to price shop and to find the best deal out there. So we expect to see the consumer looking around and trying to find the best deal that's available to them.
And now we have about 30 seconds left here. I do want to ask you, Deloitte has forecasted that the slowest holiday sales growth in 6 years. So how does the NRF's outlook compare to this? And do you see any major risks that could alter this current holiday sale projection?
Yeah, it's a projection, and it really is up to the consumer as to whether they want to spend. I think we're pretty confident that that this forecast is going to be roughly where the consumer ends up. Important to remember that there's almost no inflation in the economy when it comes to goods. There's actually deflation when it comes to goods. So the biggest challenge for retailers is actually you have to sell more of the same thing to actually make more money and to see a retail sales gain year over year. So it's going to be interesting to see whether or not that trend continues, and downward pressures on goods prices are challenging to our forecast, which is a nominal forecast.
A lot of key takeaways right there. Thank you again for joining us, Mark Matthews, Executive Director of Research at the National Retail Federation. Now we have so much more to get to coming up today, and we're going to be right back with more right after this quick break.
Elastic is an AI-powered search company. So Elastic sits at a very interesting point in the market right now. We sit at kind of the nexus of cybersecurity, data, and artificial intelligence. Cybersecurity has really morphed into a data problem. So now we're a leading provider of threat analytics and cybersecurity. And then in addition to that, everything that's happening right now with generative AI requires a search platform to be able to feed the generative AI model. So we're doing a lot with artificial intelligence.
Tell me how the integration of AI into your business model has really shifted your priorities.
We've recently announced an AI integration capability with our cybersecurity platform that you can put in your unique capabilities in your enterprise or in your agency to identify new threats that are coming in and prioritize threats based on your unique environment.
What would you say sets you apart from your competitors?
The way that Elastic works, we have this capability called data mesh or cross-cluster search, which allows you to embed small Elastic clusters in all of these different environments, whether it's in multiple clouds or on-prem, and just bring back the results that are relevant to a centralized location. Because of our open source roots, everything is open standard. So it integrates, our technology integrates very well with our existing government environments, and we can run it at a very large scale.
How is Elastic navigating through today's cybersecurity challenges in today's economic landscape?
Elastic allows you to search this tremendous amount of data coming in, and now integrating some of these AI tools allows you to find the threats that are most relevant to your environment and remediate those threats quickly and take a lot of that burden off of the security operator. The integration of AI into the security tools is going to help us continue to stay ahead of the bad actors and the emerging threat.
How do you ensure data privacy to your customers?
We have a vector search database that is required to use for generative AI and large language models. So they require a vector search platform. Essentially, we can organize unstructured data to be able to search that data very quickly and provide the relevant information that our customers are looking for. You also want to be able to provide some security controls in terms of role-based access control or even field-level security control in the data.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, automobiles are another hot topic this week as the Paris Motor Show is underway. This attracts car enthusiasts from all over the world. And the exhibit, which is in Versailles, showcases innovations from leading automakers like Volkswagen, BMW, and Stellantis. And to talk more, I'm joined by Pras Subramanian. He's the senior auto reporter for Yahoo Finance. Pras, great to have you in studio. Thanks for joining.
Thank you for having me.
All right, let's talk about the takeaways from this Paris Motor Show so far, including some of the very cool innovations that I've been seeing. What are they?
A couple big wows here in the show in Paris. We have a couple companies like Peugeot with they call it the hyper-square rectangular steering wheel. Basically, it looks like a video game controller. They put it in a concept car, and eventually it's going to go in all their new cars. And basically, it's just a step up from what they've been doing, innovating in the cockpit. They've had the iCockpit for a while, where they've had a steering wheel below the digital display. So it's kind of like another iteration of that. Yeah. And also, one thing that really caught my eye was the Yangwang U8, which is a BYD company. They're a luxury company.
Interesting.
And they have this really high-end SUV. It looks like a Range Rover.
Okay.
But get this, it can actually go in water and float, and actually they call it swim, for up to 30 minutes.
So, the swimming car, this is what I was hearing about, of course, yesterday, and as these headlines are starting to circulate.
Right, and the thing is that it seems like a gimmick, but in actually some place where there's some flooding, you might actually need that feature.
Yes.
So that's something that people are talking about. But also, I think the big picture here is about China kind of being a big presence at the Paris Motor Show.
Yeah.
And this is sort of highlighting the tension between the two sides, between Europe and China, as they kind of battle out with tariffs and sort of find out how can they bring these Chinese EVs to Europe cheaply, but then also not hurt domestic production.
Pras, I also want to talk about this rectangular steering wheel, right? For consumers, what exactly is this like, and how is it innovative?
So basically, it's got like two little holes you can hold on to, but inside are four little screens, it appears, and you can actually customize that to sort of for certain functions like music or maybe your ADAS or robot, like your sort of auto driving thing, or music, or any kind of like other kind of infotainment feature. Maybe it's like opening the windows, closed, but you can do whatever you want. But basically, it's kind of speaking to the younger generation who are used to these things, used to touchscreens. But how about putting the screen not from the center console, but actually in your steering wheel? I think it's a little kind of innovative. I don't know if it'll take on, but we'll see.
That was going to be my question. What's the timeline on some of these innovations?
They said 2026 for the rectangular steering wheel to appear in their newer cars. And the Yangwang U8, I think, is on sale in China now. And the big question is it going to come anywhere else?
Yes. We only have about 60 seconds left, Pras. I wish you could stay for longer, but let's talk about the robo-taxi unveil from Tesla, what it means.
Well, I mean, I think it's a kind of a showcasing the vision of what Elon Musk thinks about autonomy and robotaxis, and the fact that it's not just a car we see on stage. He actually drove in it to the on a studio stage lot to the event. Scissor doors. I think a very nice looking design, kind of crossing the bridge between robotaxi but then also traditional car design. So I think that's sort of Elon painting that vision. The question is, can his vision-based ADAS system or autonomous driving system actually work in real life without, sensors? It's just vision-based. That's the big question, and Elon is betting on that because he thinks it's the best way to sort of broaden out the product everywhere.
Pras, I'm sorry that we don't have more time. You'll have to join me again because such great insight. Pras Subramanian, senior auto reporter at Yahoo Finance, here in studio. And we are just a few minutes away from the opening bell, so stay with us. We're going to take a quick break, but then, of course, we will bring you that opening bell on the other side.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with Savina Rizova. She is co-CIO and Global Head of Research at Dimensional. Thank you for stopping by.
It's a pleasure.
So we understand you've launched this new UMA service for your advisors. Could you tell us a little bit about it and what the benefits are?
Absolutely. These days, advisors want to both scale and customize. They can customize with SMAs. They can scale with managed models. A UMA gives them the opportunity to both.
So one of the things that's interesting is there's a lot of conversation in our world about ETFs, direct indexing, UMAs, SMAs. How do we sort of distinguish between all of that?
Absolutely. SMAs are typically portfolios of individual securities, stocks or bonds that you hold in one account. Direct indexing is a subset of SMA, which just starts with an index, and then you customize off of that. Our SMAs do not start with an index. They start with a dimensional defined starting strategy. But SMAs generally are used for customizing for specific client needs, tax needs, or ESG preferences. Managed models are models typically of ETFs or mutual funds that allow advisors to scale by assigning many different clients with similar needs to the same custom model they developed. On our UMA platform now, they can do that. They can assign multiple clients to the same asset allocation they put in on the platform, and this allows them to have like a very consistent investment investment experience offered to different clients.
Are there key benefits? How does this help a dimensional advisor?
Oh, it helps them to gain operational efficiency because they can actually outsource the day-to-day asset allocation, taxes, and a cash flow management to Dimensional, and they can also have Dimensional data.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. That was the opening bell. RXO celebrating with the chant, grow, grow, RXO. The CEO is going to join me live on the floor in just about 10 minutes time. But now to talk markets as we are officially open for trade and stocks kind of opening flattish. But certainly still near record highs. I do want to bring in Michael Renking. He's the senior market strategist here at the stock exchange. Michael, welcome.
Hi, thanks for having me back.
Great to have you as always here in studio, especially today and this earnings season continuing to carry on, really, of course, starting this week with a focus on financials.
Yes.
What have we been able to take away from these reports so far?
Yeah, it's been a really positive start to the earnings season. From we've gotten pretty strong numbers from the financials. We're hearing solid results from the capital markets, investment banking activity. Fee-based businesses have been pretty strong. In terms of kind of commentary around the consumer, that's also remained reasonably optimistic. We haven't seen any red flags in terms of credit quality or credit deterioration, so that's a positive. Right, and then markets are very much focused on net interest income as we're seeing yields start to move lower and the shape of the yield curve change. Right, and the banks have put up solid results and suggested that the trough in net interest income is upcoming. Looking out into next year, right? So the sector has traded really well. If you look at the XLF, which is the ETF, right, it's clearly broken out to the upside over the last kind of couple days.
How have you noticed performance broadening out, expanding beyond just the mega cap technology companies where it was concentrated for a good part of the early days of this bull market?
Yeah, so that was very much a theme that we started to see, that breadth expansion really during Q3, right? And that's really continued up until this, at the start of Q4. We did start to see some of the mega cap tech names, kind of re-find some life at the start of Q4. Yesterday, with the ASML results that were released early, which were pretty negative, that took the semiconductor index down. They're having their call right now, so we'll have to see how the commentary around that plays out. But that definitely weighed on the tech trade yesterday.
I'm curious too, in terms of it being an options expiration week, Michael. You are the expert on this. What does this mean for our viewers?
Yeah, so options expiration. Over the last few years, we've really kind of seen this kind of be an important point, at turning points within the market, right? If you actually look back to the pandemic, the low during the pandemic was right following options expiration. Actually, we just celebrated the 2-year anniversary of this bull market, and that bull market, that low also occurred during, kind of during the options expiration week. Now, we've talked about over the last couple of times that I've been on with you about the idea of this pain trade, right, to the upside, where markets were moving higher into the election, as people have. Despite the fact that people have been kind of taking some, moving to the sidelines and looking for volatility heading into the election, but and we've continued to see the market move higher. My one question is, in options expirations week, sometimes you can see the moves really get exacerbated by the positioning and the hedging that has to happen at the dealer level. And if we were to really see a continued kind of acceleration to the upside here, that would lead me to believe that we may have kind of hit a short-term kind of top, which would make some sense 2 weeks out from the election.
Interesting. So very quickly, Michael, in about 20 seconds, any other trading patterns you're noticing heading into Election Day?
I mean, we have started to see betting markets kind of shift a little bit to a Trump presidency over the last couple of days, right? So you're seeing some of those kind of old, kind of Trump trades start to work. Cryptocurrencies, kind of really starting to move to the upside over the last couple of days.
Okay, great. We'll definitely check in with you as we lead into that election for more of these trades and what's happening. Michael Ranking, Senior Market Strategist, joining me in studio. Michael, always a pleasure.
All right, see you soon.
Okay, see you soon. Okay, great. Well, stay with us because on the other side of this break, we're going to be joined by RXO, the company celebrating the opening bell. It's been here 3 times in 3 years, a $4.5 billion logistics firm, and we'll have more on the other side.
So, Madhu, tell me, what are your thoughts on the current market conditions in the AI space, and how is Icera positioned to navigate them?
Very good. Let's say lots happening in the AI space. You saw recently with NVIDIA, Jensen, the CEO of NVIDIA, making announcement, I think, month of March. And last week we were at ServiceNow event. And today, Microsoft with Satya announcing a lot at Microsoft Build on Copilot. The market is evolving so much in Gen AI space. Every month there's something new. And what at Icera we really position is we are the ChatGPT and AI search for enterprise. So the new thing right now, this 2024, is all about AI referring to enterprise, right? How enterprises can use ChatGPT and AI search to do it in a secure way without data leakage, without data being lost, and doing in enterprise data that's behind the firewalls. That's the biggest trend that's happening right now in the AI space.
And what growth have you seen over the last year?
See, for Icera, we've been very fortunate and we're lucky. So it's thanks to all the customers, partners, and employees. We've been growing more than 100% in last 12 months. We have added so many new customers. We are landing multiple large deals. So we are very fortunate to get customers that starting from companies like Cisco, Workday, Gap. We have customers like Gilead, Amgen. So we get so many new customers adding every year, every quarter. The growth has been fantastic.
Now, GPU usage is skyrocketing, leading to more and more energy use every year. How has Icera helped combat these issues?
So what Icera has done is we have done a very interesting architecture. We call this one agentic inference architecture. It's a hierarchical agentic architecture in the sense the way in which we do it is we separated the foundation models, domain-specific LLMs, and task models. Our secret sauce is in the domain-specific LLMs in our hierarchical agentic architecture. By doing that, what happens is for every training and in inferencing, we don't need to always go use that much compute and NVIDIA.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, XPO chairman Brad Jacobs has started 5 different public companies, turning them each into billion-dollar enterprises. He also penned a best-selling book, How to Make a Few Billion Dollars. Jacobs was a recent guest on Inside the Ice House podcast with our own Lance Glynn. Listen to what he has to say about starting a business and making it prosper.
I was watching the evening news, and on the screen, it was the first time that a company, turned out it was Exxon, now called ExxonMobil, made $1 billion profit in a quarter. And the headline was, obscene profits. And I was thinking, I could make some obscene profits. $100,000 sounds like an obscene amount of money. Maybe I should get in the oil business. That was and it clicked right there. I got to get in the oil business. And I went to the library. There was no internet then. And read every book I could find on what was then called the Seven Sisters, the big oil companies, and the history of the oil business. And I tried to figure out, well, what is upstream, what is downstream, what is processing, what is shipping, just how the whole thing worked. It was very, very fascinating. And I found some other people who were doing oil brokering, and oil brokering worked. If you had asked me back in those early days, when you're 67 years old, Brad, you think you'll still be in the business world, I would have had a big belly laugh. I said, no way, I'm not gonna waste my life making money. I wanna go out and do music and fun stuff and discover the purpose of life and the meaning of life and answer all the big important questions that we want to answer. But one thing led to another, and I just started making a lot of money from one business to another business, and I just never stopped. So I just kind of got onto this flow. If you look at my different companies and just forget what industries they were, it was the same business plan in every industry. Every business plan, whether it was waste, whether it was equipment rental, whether it was trucking, whether it was warehouse, whether it was truck brokerage, whether it was LTL, what did we do? We found industries that had certain characteristics that we could capitalize on to create a lot of alpha. And they were the same exact characteristics, and that's the playbook.
Stand by, guys, 5 seconds.
All right, well, joining me now is the man of the hour, the CEO of RXO, about $4.5 billion logistics company, Drew Wilkerson. Drew, thank you so much for joining me, and congratulations on ringing the opening bell.
Thank you for having us. It's great to be here. This is the third time we've been able to do it, but this acquisition was the most fun that I've had up there, so great to be here.
We're so happy to have you, and of course this comes after a very big acquisition, as you referenced, of Coyote Logistics from UPS. How is that integration going?
We're just over 3 weeks in, so we're still in the early stages, but from a morale standpoint, from a people standpoint, it is going phenomenal right now. We're continuing to build relationships. We've got customers here, so to be able to hear customers seeing the benefit of what we're creating from scale has been great for us to be able to see. And our carriers now that do business with us have more than double the freight than what they had before to be able to choose on the platform of where their next load comes from.
How is this economic cycle impacting your business? We see stocks near record highs, GDP growth of about 3% in the third quarter. What does that mean for your firm?
So we've been in a freight recession for over 2.5 years now. And for us, there's a playbook for every cycle that we run through. And part of the playbook was being able to do an acquisition at the bottom of the cycle. So for us, what we've done is we put ourselves in a very strong position whenever the market does start to turn.
Interesting. And in terms of what the supply chain has in store, we've seen inflation prices come down a little bit. How are you monitoring inflation as it impacts your business line?
We're paying very close attention to what is happening with the end consumer. We've seen where the end consumer lately has been spending more money on experiences versus goods and services. So we're watching as we head into the fourth quarter. Are they going to spend it on Christmas presents, or are they going to spend it on experiences? If you start to see retail and e-commerce pick up, that'll be very good for our business.
Interesting. I'd like to talk to you about the reach, right? Obviously, your company based here in America in terms of where you do business and how things like the election and, of course, the global economy play into it. What can you tell me on that front?
Yeah, it's something that we watch overall is what's going on with the global economy. We are a predominantly North American, US-based business, but we do a lot of cross-border business. And one of the trends that we've been watching over the last few years is what's happening with cross-border freight. You're starting to see more and more companies shift their manufacturing into Mexico. And for us, we've been able to grow our Mexico business for the last year on over 30% on a year-over-year basis. So as you start to see businesses shift, it creates a good opportunity for us to be able to get the products to the end consumers faster.
Interesting. And I want to hear more about how you're streamlining that process, the whole logistics process, right? How consumers can, by how much perhaps they can expect their goods faster.
Yeah, so we've got a last mile business, and what that is big and bulky business that goes into the home. And for us, we're the leader in the US on last mile deliveries. And even for that business, it's been growing at a good clip for us this year. And that's because we've got hubs that are within 120 miles of 90% of the US population. So we've got a wide reach to be able to get the end products to the end consumers fast.
What is RXO's role in a world where we know Amazon is increasingly moving into the logistics space as well, at a time when a company like UPS, for instance, is pulling back, and your recent acquisition of Coyote Logistics from UPS, I'm sure, playing a role as well?
Yeah. I think you're going to continue to see RXO grow over the long term. We're building this business for the long term. Our goal is to be the largest provider of truckload freight in North America, and this acquisition helps us to get on that path faster.
How important is the holiday season for your firm?
Q4 is a big quarter for us, and like I said earlier, we were paying close attention to what happens with the end consumer. Right now, inventory positions are in a good spot. It just all comes down to what is going to happen with the end consumer and how do they choose to spend their money.
I'm curious, Drew, as I kind of do a little swap-a-roo with my hands here. This is a much better format for me. Thank you. Got to get comfy. What else is on the horizon, especially after this deal and as we head into year end?
Well, we're 1,000% focused on making sure that this integration goes well for employees, for customers, for the carriers that we partner with. But we're also looking for what could be the next deal. We know how to do M&A. It's in our playbook. And if there's something else that pops up at this point in the cycle, like I said earlier, this is the right point in the cycle to be doing M&A in the brokerage space.
How closely do you follow the share price?
Not closely at all. I have no idea what it is today. You know, for us, we're looking at where the share price goes for the long term, not on a day-to-day basis. So I typically don't even look at it every day. I look at it, once or twice a week.
I like what you mentioned earlier. You've been down here. RXO has been down here 3 times in the past 3 years. And of course, the New York Stock Exchange obviously so values you and your company and your presence down here. What is the importance of the stock exchange and the trading community that this provides to your company?
Well, I think one, it shows the financial stability that we've got within our company and the strength of the company and the strength of the balance sheet that we've been building. And it also shows that, we build this for investors for the long term. And so investors who have partnered with us for the long term, we did our spinoff in November of 2022. And I do know the stock price then, it was just over $19. So to watch where it's gone over the last 20 plus months has been fun for us to see.
Drew Wilkerson, so great to get your take and hear from you, of course, down here on the floor of the New York Stock Exchange after celebrating the opening bell. Drew Wilkerson is the CEO of RXO.
Thank you for having me.
All right, stay with us, everyone, because up next, we are going to have a good conversation specifically about lenders in the space as bank earnings continue to roll on. We'll have more in just about 2 minutes.
Our company is designing the most advanced memory and storage controller chips to help solve the bottlenecks for the data pipeline for the AI and the cloud infra. We are building a platform from the chip design to the firmware, software, all the way to the turnkey modules and helping customer get qualification and deployment in the data center. That really help us to differentiate from the traditional companies that are facing a lot of efficiency and innovation challenges.
And you recently announced a new SSD controller chip, use of a new ARM Cortex R82 cores. It's a new technology in this space. Tell us exactly what this is, what's unique about it, and about the new technology.
We have been focusing on designing most advanced storage and memory controller chip solutions. These technologies are helping solving the bottlenecks for our data pipeline in the data centers, and it's extremely critical for our future growth. The technology we innovate and we adopt will serve that purpose. For example, the technology we just announced on the advanced error correction coding, that will help really significantly improve the reliability of DRAM tier of high capacity, and also help reduce the server downtime. On the other hand, we also partner with industry leading IP vendors like ARM. Their latest R82 core is the greatest and latest embedded CPU, which is great for our next generation controller chip. And it has super great performance, power consumption, and a variety of new features. So that's how we synergize with best-in-class IP and
Now we're diving into SoFi's $2 billion deal with Fortress Investment Group, a major move that signals big growth in the fintech space. Joining me now to talk more about it is Emily from Barron's. She is the journalist behind a detailed report in this groundbreaking partnership. Thanks for joining us, Emily.
Hi, thanks for having me.
Tell me about what key factors you think drove SoFi to partner with Fortress for this $2 billion investment, first off.
Yeah, absolutely. So SoFi began as a lender focused on refinancing debt, but now operates through the 3 different segments: lending, financial services, and the technology platform. And we don't have a ton of information about this deal, but the CEO said in the press release they're looking to diversify towards less capital intensive, more fee-based sources of revenue. And the company posted their first quarter of profitability back in January. So I think this investment is one way to keep making strides on that, which is definitely something investors will be paying attention to.
And how do you think that this deal is positioned with SoFi in comparison to its fintech competitors?
Yeah, absolutely. So I think it's a little bit different. I think if we look at the fintech space, everybody's kind of doing something a little bit different. We've got Affirm teaming up with Apple Pay. We've got PayPal in reinvention mode. And I think with SoFi, as I mentioned earlier, they started in lending. And I think that point of differentiation still really resonates with investors. We saw the stock rise 11% on Monday. So that's definitely something that still matters to investors. And yeah, we'll see what they say when they report earnings at the end of the month. But I think this is definitely going to be something to watch.
But what would you say is the key differentiator? You mentioned Apple Pay and a few other storylines that you're following, but from this vantage point, what do you think is that key differentiator from the competitors that are currently on the market?
I would say SoFi, they've definitely focused on the higher income consumer in the past. When I've spoken with Anthony, the CEO in the past, he's talked about, that higher income consumer. And I think the nature of this deal allows them to expand a bit to maybe people who wouldn't be in that core audience. And that's something that he's talked about for a long time now, is kind of expanding beyond that, the fundamental group.
Now, could you elaborate on how this expansion of the loan platform might affect SoFi's consumer base?
Yeah, absolutely. So there was a note earlier this week from some KBW analysts that were talking about the lending as a service business. So basically, loan applicants that were either rejected by SoFi, like the borrower doesn't fit the credit criteria, things like that, they would move to other loan origination partners, with SoFi then earning a referral fee. So it's a little bit different than what they've done in the past, but it brings other consumers into the space, right? Other customers that they might not otherwise have served, if that makes sense.
Now, through your reporting and through your conversations with the CEO, what risks do you see in SoFi's strategy with this investment, if any?
Honestly, I wouldn't say I see risks. I think that it's an interesting step because in the most recent quarter, the CEO and analysts had definitely been focusing on those other two platforms, the financial services and technology, and they had toned back a little bit to focus on lending. So a deal like this, obviously, investors were really excited about it. I don't really see it as a risk. I see it as a little bit more return to the roots. But I do definitely see them still innovating in the technology space, in the fin services space. I think this just kind of, as I said, goes back to the roots a little bit.
How would you say this partnership aligns with the broader trends right now that we're seeing in the fintech sector? I know you're following other major stories coming out of this industry.
Yeah, absolutely. So right now in fintech, I would say a lot of team ups. If we think of Affirm and Apple Pay, recent partnerships with Amazon and PayPal, we've got a lot of these big players looking to fill holes with some of these smaller companies that are a little bit more nuanced. They've been devoting a lot of dollars to this technology. If you look at, Affirm and Apple Pay, obviously the Apple Pay, Apple Wallet is everywhere. And these bigger companies, they're realizing, this is not my own analysis here, but when I spoke with an analyst a few weeks back, he said, Apple probably tried and realized that they couldn't, work as efficiently in the buy now, pay later space because they did have a little fray into that lasted about a year. And they went looking for somebody who could fill that hole, which ended up being Affirm. So I think that kind of exemplifies a larger trend of these bigger players looking to smaller names to fill those holes.
I couldn't hear that last part of your question, Emily. Apologies for that. But do you foresee Fortress playing a more active role in SoFi's operational decisions moving forward?
I think potentially, yes. Again, we don't have a ton of detail on this deal. I'm assuming we're going to get more at the end of the month when they report their quarterly earnings. But right now, it just seems like a very interesting step for them, as I said, to just kind of diversify revenue streams, get some new consumers in the door, and that return to the roots with the focus on lending is definitely something to watch.
A lot of things to look out for. Again, Emily, thank you so much for your key insights and your reporting on this story. I look forward to speaking with you again soon.
Great. Thank you so much.
Now I'm going to bring in my colleague, Kristen Scholler, once again. Kristen, I mean, it's been an action-packed day here at the exchange, and you had a wonderful interview with the CEO of RXO.
That's right, $4.5 billion logistics company, Trinity. I'm sure our viewers and members of the NYSE community watching at home or on the go are very familiar with RXO, a spin-out out of XPO Logistics. But the chair, Brad Jacobs, and the CEO of RXO, Joe Wilkerson, very familiar faces down here on the floor of the stock exchange. I was listening to your SoFi interview.
Yes.
Great to get that take here from that reporter, Emily. And I think it's interesting because this conversation obviously coming as lenders and banks very much in focus this week as earnings season kicks off. And we know banks always start the earnings season, but between what's been strong stock trading revenue and investment banking revenue, that's been able to lift some of these major money center banks like a JP Morgan, like a Goldman Sachs, like a Citigroup as well. And so we'll see how the Fed rates obviously impact some of these other loan growth operations going forward.
No, absolutely. And we're going to be covering more in depth when we have those retail sales numbers that come out tomorrow. Obviously, we kind of previewed the forecast with the NRF guest that we spoke to earlier today. And he had a lot of key points that he pointed out as to what the consumer trends are, how retailers are preparing for the holiday season. I feel like we're in it right now. It really kicked off on October 1st. And just really the broader sector and how it's positioning itself to be prepared for the holiday shopping season overall.
Have you started your holiday shopping?
I have not started my holiday
What's
shopping
on your
yet.
list,
No,
Trinity?
I haven't.
We gotta know.
What about you? You know what? I just read a report actually that, do you know that candy sales are down, speaking of holiday shopping, as people are preparing for Halloween.
I think some makeup brushes.
You need makeup brushes.
You know, I gotta make sure that everything's in the right place. But I was thinking about this morning on the commute in. Maybe this Black Friday I'll take advantage of some makeup brushes.
You know what? Maybe we should do like a white elephant gift exchange here at the New York Stock Exchange, and then maybe you could get some makeup brushes for Christmas.
I think so. We can show a full screen to our viewers as to what exactly was exchanged in this gift exchange, just for a little bit of fun. But I'm looking up there at the market, Trinity.
Green on the screen.
Green on the screen. That's good. We do see the S&P down just a hair, but we are still near record highs, and many guests who have joined NYSE TV Live optimistic about what is ahead, given the resiliency of the consumer, the resiliency of the economy, and of course lower interest rates, which simply make money cheaper. That's why we cover it so much, right? It's less expensive to borrow money, and thus it does usually lead to more economic growth, and we see that play out in the stock market.
And we're seeing that, obviously in the people that we're talking to here, although there were inflationary concerns that consumers are still spending, or we're anticipating up to a 3.5% increase from 2023 into 2024, and it could maintain throughout 2025. So we're still hitting those record numbers as we're seeing the market still hitting those record highs, well, at least close to it anyway, so a lot to look out for.
Absolutely. And in terms of what the NRF had to say, we know this holiday shopping season is when the retailers basically become profitable for the year.
Yes.
So I do expect that that'll be a storyline that we'll continue to cover here on NYSE TV Live. Trinity, I know you've been following a lot of the retail space, even these past few days. Is October 1 still does seem like the unofficial start to the holiday season since the coronavirus.
Well, as we were talking to the crazy coupon lady, so-called crazy coupon lady earlier in the week, and she was pointing out how, there's Black Friday in October. We're seeing these retailers and huge consumer brands really pushing those sales earlier and earlier in the season to make sure that consumers still shop. And we have to start our shopping, Kristen, so we can get in on those deals.
I know those makeup brushes. If any of our viewers have any insight on that, please leave a comment for us here on NYSE TV Live. That's going to do it for today's show of fun, and thank you for watching. I'm Kristen Scholler.
And I'm Trinity Chavez. We'll see you next time.
life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege